this computer, and the recording is on. All I need to change in my life is my MetaTrader's color from red to blue. Yeah. Okay, guys, so welcome everyone. It's Marcel here, and in this session, we will talk about an educational topic, which I will tell you really soon. Sorry?
Oh, it's on. It didn't record, but it's started.
I didn't start the recording, or what?
No, it's started now.
Okay, so in this session, we will have an educational topic, and after the educational topic, I will just break down the price section as usual. I will create a forecast for the upcoming days and weeks. And yeah, you recommended, guys, that I should talk about the actual platform game, that how you should manage the accounts, what can you do, how can you prepare for the platform game, how can you prepare for getting funded, or how can you keep the account, how can you constantly make profit on these accounts. But yeah, this is a really, really good topic, and this will be next week's topic, because this actually requires a bit of an pre-work. So I have to work on this before I even start the session, and before this session I didn't even have time to think about it. So we will make it with John on next week, in next week's Wednesday webinar. We will talk about the challenge passes, we will talk about how to keep an account, how to manage an account, how to prepare for getting funded, etc., etc., etc. But yeah, it requires time. We have to get prepared for this session. And in this session, I will talk about an easy thing. Not even an easy thing, because you guys are still getting confused about this thing. Sorry, I was just drinking. So the thing will be substructure. What can you do if there's a structural high point, structural low point, and price is just ranging between the structural high and low? Is it a change of character? Is it a break of structure? Is it a change of character, etc., etc., etc.? Because it's so that this topic has actually caused confusion around you, and you still don't know what is substructure, what is real structure. And yeah, let me just draw a quick example. Get rid of these. So let me just draw a quick example. For example, this is the 15-minute chart. Okay, price is coming up in an uptrend on the 15-minute chart, creating highs and lows. Okay, let me just change the line to normal line, just thicken a little bit to 4x. Okay, so price is going in an uptrend. Please, I want you to raise your hand if you'd like to answer this question. Whoever raises their hand first can answer this question. I want you to mark out the highs and lows on this chart. Just mark the highs and lows out. Pascal, Noah, please. Yeah? Yeah. That's good, but there's only one problem with this, that this isn't a high or low. This is an unconfirmed high or low. This is a substructure which has not been decided yet. This will become a higher low if this higher low reverses right here and creates a new higher high. It creates a break of structure, then this low point will be a higher low point. But if it reverses, please just remove your drawings. And if it reverses right here, for example, and can break structure to the upside, so there won't be a break of structure to the upside, and just reverses below the low point before even breaking structure. So let me just remove this because it's hard to draw. So if it reverses before even breaking structure to the upside, somewhere around here, there will be a reversal. Then this won't be a higher low, because this higher low will only be a higher low if it can create a break of structure to the upside and break an actual higher high point. And it will become a higher low because it's a higher low. It will be a comfort higher low. If it can break above the structural high point, then it will really become a higher low point. Likewise, if this high point can't break below this low point, then it will be a higher high. But of course, if it breaks below this low point, then it will be a higher high too. But then this high point right here will not be a higher low. It will be a lower high. So it will change. But this is not a substructure. I want to talk about the substructure. So if price is between the high point and low point, so we have a high point right here. Let me just move it right here. So how should I mark it? With this box. So we have a high point right here, and we have a low point right here. Everything that happens between this high and low point will be substructure. or I don't even care how you call it. You can call it secondary structure. You can call it, I don't know, Rosita, any name. You can call it however you want to, but I will call it substructure. Anything that happens between a high, the less recent high point at low point, or in the bearish example, the less recent high and low point, of course, anything that happens between these high and low points will be substructure. So if price, for example, creates a downside movement right here, then it reverses to the upside, then it creates another downside movement here, then this break right here, this won't be a break of structure. We can consider this as a break of structure because this low point, I mean this high point, no, sorry, I mean this low point couldn't even break above the last recent high point. And everything that happens between this high point and this low point will be substructure. This will be a sub break of structure, not a real break of structure, just a sub break of structure. So basically, these break of structures that are happening between the lows and highs, these sub break of structures are just the pullback phase of the overall bullish trend. This is a pullback phase of the bullish trend. And for example, if price just ranges between this high and low point and creates a downside movement, upside movement, downside movement, you will think that this is a break of structure here to the downside, but it's just a sub break of structure. Then it will create an upside movement, and you will think that this is a change of character here to the upside. But it won't be a change of character also. It will be just a sub change of character because all of this break of structure, all of this change of characters happen in between the high and the low point. So this will be a sub break of structure. This will be a sub change of character, which can be considered as a real break of structure and a real change of character because there's still a high chance that, for example, there's this demand zone that has caused the sub change of character here to the upside, and there's still a high chance that this demand zone will be broken because this is just the substructure of the overall main structure. Substructure has a high chance to be broken, so this demand zone has a high chance to be broken because price is following the main structure, price is following the main order flow, and the main order flow is the price is stepping into demand zones, following the order flow after demand taps, and it doesn't give a shit about the substructure really. But of course, there's still a chance that price will create a change of character right here and continue to the upside and break structure here to the upside, for example. But there's still a chance that price will create a big change of character here on this zone. It will create another sub break of structure here. It won't be able to break above this higher point once again. So the substructure is still living on, substructure is still forming. And it's just a liquidity forming movement, basically. It's just forming liquidity for the deeper demand area, for the extreme low area, and the extreme high area. It's just forming liquidity and substructure. Of course, you can trade these movements, but these movements are really, really risky. So if you're trading these movements will be risky. These are much more riskier than the usual main structures. So once again, anything that happens between this high point and low point will be just a substructure. Even if price, let me just remove this, even if price wicks above the high point. So there will be, for example, a pullback after the high point is being created, and there's another upside movement. And at this upside movement, price will create a candle right here that wicks above the last recent high point. So it's just a wick break. This is a wick break. This won't be a break of structure. This isn't a break of structure. I will just write it right here. Also, this isn't a break of structure because it was just a wick break. So wick break can be counted as a break of structure. I'm just telling you these things, guys, to you because on Monday, I believe on Monday, there was a confusion about this kind of structure. And I just wanted to clear it that break of structure has to happen with body closure. Every single time it has to happen with body closure. If there's a body closure, then it will be a break of structure. If there's no body closure, then it won't be a break of structure. Change of character. Change of character has to happen on the 1 minute chart. I mean, it can happen with wick closure too. So on the 1 minute chart, wick closure is perfectly fine for change of characters. On the 15-minute and 4-hour time frame, we need, I don't say that we need a body break, but body break for a change of character on the 15-minute and 4-hour chart is much more stronger than just a wick break. But on the 1 minute chart, I'm using the wick breaks for change of characters. On the higher time frames, more likely I'm waiting for the confirmation of the body closure to count it as a real change of character. But you can still count it as a change of character on the 15-minute 4-hour if it breaks with a wick, but it will be weaker. It has a less chance to actually play out. But if it closes above/below with body closure on the 15-minute and 4-hour chart, you can really consider it as a change of character. But back to the substructure. So if this can close above this high point, this won't be a break of structure. This isn't a break of structure. So this low point will be a weak low point. This is a weak low point because this weak low point couldn't break above the high point, right? This weak low point couldn't break above this less structural high point. So if price breaks below this weak low point, This one right here won't be a change of character. This is not a change of character once again. This is not a change of character because this low point couldn't create a new high point. And if this low point can't create a new high point, then this will be a weak low point, a sub low point. And the sub low point can be counted as a change of character as a main structure. So yeah, this low point couldn't break above the last high point. This isn't a change of character, sub change of character, meaning that this supply zone here that has caused the sub change of character has a high chance to be weak. So you can't expect a limit order on this zone. You can't put a limit order on this zone. You can't trade on this zone because this is a sub supply zone also, which has caused a sub change of character. All you can do in this case, for example, is to wait for a tap of either this demand zone down here, wait for a confirmation on this demand zone, wait for a follow, wait for a confirmation of the main order flow. For example, if this overall structure is the 15-minute structure, then you can wait for this 15-minute structure, demand tap, confirmation on this demand zone, continuation. Or you can wait for the break of this high point, or you can wait for the break of this demand zone. But we talked about these scenarios in the past webinars, so you already know these scenarios. I just wanted to talk about the substructure, that you have to understand that everything that happens between the low point and high point of the main structure is just a substructure, and these movements can be trusted. And this has happened on Monday too. Let me just find that overall example from Monday, because that was a really good example for this. Which day was Monday? It was 6th of.
It was Monday.
Yeah, thanks, John. You are really helpful. So yeah,
6th of July.
Here's the 6th of June. Where was that movement? Yeah, this one right here. Yeah. So how does the main structure looks like in this case? I want you to raise your hand if you like to answer this question. How does the main structure looks like in this box? Just mark the main structure out, please, for me. Starting from this candle, whoever raises your hand first can answer this. Was it Pascal again? Was it you? Or you just left your hand raised?
Yes, but if there is no other volunteer, I want to do it.
Okay, just go ahead. Mark the structure in this box, please. How does the structure look like?
So I would say bearish.
Yeah, highs and lows. That's the high point, exactly. That's the low point, exactly.
And then, yeah, I would go here. Get broken. Like this, eh?
You mark the new low here.
That's the lower. That gets broken, and that's the lower.
You mean that this low point was broken?
Yeah.
No.
No.
I was just explaining.
A little bit further, you see the body closure.
No,
the black,
it didn't close below with body.
The black candle.
Look here.
Okay. No
body closure. So the real structure here in this case. Thank you for drawing my screen. Thank you for your work. So the real structure right here is that this is the high point. Unless this high point breaks, there won't be a change of character to the upside. So unless this high point breaks, there won't be a change of character. If this high point breaks, there won't be a change of character. The low point in this case is this one. Unless this low point breaks, there won't be a break of structure to the downside. So the structure in this case is this high point and this low point. And this is the perfect example that I was talking about, that everything happens between this high point and low point, maybe just a substructure. All of these movements were just substructural movements. The main structure is this one, high, low, high, low, high, low. Last recent high, let me just mark it with a cleaner markup. Last recent high, last recent low. Anything that happens between this last recent high and last recent low will be substructure, unless the break of this low point happens with body closure, or the break of this high point happens with wick. Because, you know, for the upside, this is a change of character, this will be a change of character line, and for the downside, this will be a break of structure line. For a break of structure, we need a body closure. for a change of character, we need a wick closure or body closure. Anything is fine on the 1 minute chart, right? So unless this low point can be broken with body closure, and as you can see, there was no body closure break here at this region, then this high point won't be a structural high point. It will be just a sub high point. And this high point won't be a structural high point. This is just a sub high, sub high, sub high, and sub low, sub low. This is the real high. This is the real low. Do you understand what I'm talking about? So if price breaks above this high point, right here, the break has happened. Lots of you guys thought that this was a structural break. Lots of you guys thought that this was a change of character right here to the upside, and you can go along because the change of characters happened. There was actually a demand somewhere around here, and the change of characters happened here, and you thought that, okay, this is a change of character, we can go along now because this was maybe a flip too, because this is the last recent supply zone. But no, this isn't a supply zone because this supply, this wick couldn't break below the last recent low point. So this won't be a supply zone, this won't be a high point, this won't be a character changing line. So you can't open a position. I know that lots of you guys have open position on this demand zone. So you can't open a position on this demand zone because this candle won't be a demand zone. It will only become a demand zone if it could have break above this high point, because this is, as you remember, this is the last recent high point that has created the last recent low point, right? So this is the last recent high point once again, and this demand has to break above the last recent high point in order to validate this demand zone. If it can break above this high point, then it won't be a demand zone. It just will be a sub demand zone, substructural demand zone, substructure. Anything that happens between this high and low will be a substructure. So what can you do in this scenario? What can you do in this case? You can just simply wait for a reaction on the high point. So for example, here's the high point, right? This high point has created the last recent low point, and actually in this case, the wick is the perfect example. So you can just simply wait for the reaction on this high point, or for example, if it's a really good opportunity, you can wait for a tag and risk entry, like I did on Monday. This was my entry opportunity because this was just a liquidity building movement, not a character changing movement. I will change it as liquidity. This was a liquidity. So yeah, you can wait for a tap of this zone. You can wait for a confirmation on this zone, like it has happened here, as you can see, because there was a character changing movement here to the downside. Character has changed. Here was the last recent supply zone that has changed character. Confirmation happened on this zone. Or other scenario, for example, if these movements can't happen right here, I will just replay price. If these movements can't happen right here, what can you do? What can you wait for? You can just simply wait for another breakout structure here to the downside, for example. If the breakout structure happens here, then this will be a breakout structure line also to the downside. This will be a breakout structure because this, for example, either of this demand supply zone or either of this supply zone caused the breakout structure here to the downside, right? Because still this is our less structural low point. You have to map your structure out. This is a less structural low point, and if the less structural low point breaks from a supply zone, for example, from this supply zone, let me just mark it with real supply zones, from this supply zone or this supply zone, then you already know the scenarios that could happen. You already know what could happen. If this supply zone has liquidity below it, if there will be a liquidity, we talked about this several times. And for example, cancellation, you can enter on this supply zone. You'll be able to enter, put a limit order on this supply zone. There will be a limit order. You'll be in the trade, right? Because there was liquidity for this zone. This is a cancellation scenario, perfect cancellation scenario. But if this zone has no liquidity, then this zone will be the liquidity for the upper area. And if this zone has liquidity, and this zone is part of the liquidity, because as you can see, here's double taps, then this zone will be able to hold price. And this zone will hold price, and you'll be able to trade in a confirmation. But yeah, once again, this isn't about confirmations. This is about the substructure, main structure, real structure, and secondary structure. All you have to understand is which one is the structural high point, which one is the structural low point. And you don't have to panic between these highs and lows. So you don't see, guys, this is what I'm talking about, that this game is all about patience. You were rushing. On Monday, you were rushing because you wanted to enter in the trade. You just wanted to enter in trade because you were so sure about this change of character right here. You just wanted to pull the trigger at any cost, right? You just wanted to pull that trigger. But no, that's why I'm saying every single day, every single time, that trading is all about patience. If you are patient, you'll be rewarded. If you are impatient, you'll more likely lose your money. So yeah, high point, low point. Wait for the break of this high point. Wait for the confirmation of this high point. Wait for the break of this low point. And that's all you can do. That's all you can do in substructure. We don't really care about substructure because substructure, all of this substructure doesn't fit in our plan. We can't trade substructure with this strategy. This substructure for us will be just liquidity built up for the real structural highs and low points. I don't know if there's any, for example, mentorship course that focuses on substructure and teaches how to trade substructure. But honestly, I don't give a shit about who's teaching substructure and how to trade on substructure. We are not trading on substructure because this is useless for us. We have real structural high points, we have real structural low points that we care about. If these structural highs and lows are being tapped or being confirmed, we are entering a trade. We don't care about the noise. This is just the noise of the overall main structure. Everything that happens between a high point and low point will be a noise. This is a noise. This is a liquidity building noise. We don't care about this. Just imagine that this is just a blank space. We don't even see this space. We don't see what's happening in this space. We will just blur it out. If price can break outside of this space and taps this zone, we will care about this zone tap. We will care about this zone break. But everything that happens between high and low point, we won't care about what happens between these highs and lows. So yeah, I believe I talked about this perfectly enough. Let me know if you just understood what I was talking about. Was it understandable? Will you pay more attention to these substructural highs, lows? Okay, perfect. Another question. Another question? Please just remove your drawings. All right, we'll remove it. Does it need further explanation? So do I need to explain this more, or are you just fine with this? I mean, you know, do I need to explain this more? No, okay. Not more. It's fine. It's understandable. Okay. Just one more thing, one more note, guys, about last week's webinar. That actually, since I hosted last week's webinar on Wednesday, I believe, perfectly 1 week ago. Yeah, exactly 1 week ago. And after that, I just hosted the bonus webinar on Thursday. So since I hosted that bonus webinar and Wednesday's webinar, and I was talking about the high probability setups and how I open my setups, how I open my trades, I actually saw that lots of you guys have chilled down. Lots of you guys have chilled down, and lots of you guys are just simply waiting for the best possible scenarios that I was talking about. And I see less more bullshit and stupid trades in the chat, because to be honest, just be completely honest, the Euro USD chat has become a noise, right? Before last week. But after I hosted that session, you guys have shown discipline. You guys were actually disciplined about your trading, disciplined about your positions, and it was less more noisy. It was just clear, simple, without the bullshit, without the bad trades, without the noise trades, without the literal zero probability setups. And yeah, I'm actually proud of you because you took my advice. You took my advice and you were listening to me. And yeah, just please keep going. You don't have to care about the misses. Of course, yesterday there were misses, right? I opened 4 limit orders. And from those 4 limit orders, only 1 get tagged. I missed 3 trades yesterday. You don't have to care about these trades. You don't have to care about the misses. All you have to do is keep pushing, keep looking for opportunities. Because the nice example, the best example for this is on maybe 2 weeks ago. 2 weeks ago, that was a pretty bad week. From Monday to Thursday, there was literally no setup. There was literally bad positions, bad price action, etc., etc., etc. And lots of you guys were frustrated, right? Lots of you guys were confused, frustrated, didn't know what to do, and you just wanted to stop trading because fuck this price action, fuck this Euro USD, I don't care about trading, etc., etc. But on the last week, on the last day of the week, on Friday, price has just presented 30 risk-reward ratio, 30. Let me just write it down. 30 risk-reward ratio in one single session, in one single New York session. High probability risk-reward ratio. We were backtesting this risk-reward ratio in the last backtesting session, so please just watch it back if you haven't seen that already. So you were waiting 1 week, you were waiting 2 weeks, you were missing 2 weeks of trades, you didn't really open a position since like 2 weeks, right? Or you just missed the position, or you just lost the position. But on the last day, on the last Friday, 30 risk-reward ratio, high risk-reward ratio have presented. And this wasn't like, okay, I couldn't see this setup, I was skipped out of this trade, I missed this trade. It was like a crystal clear setup where price tapped, for example, a supply zone, there was character changing movement, there was a liquidity building up for a supply zone, there was only one supply zone, entry, bam, 25 risk reward ratio or 15 risk reward ratio, sorry. There were 2 trade opportunities on that day. And all you have to do is wait for these kind of days. As I said, not every single day is a trading day. If you take a look at the experienced traders, for example, if you take a look at the hustle guys, take a look at the phantom guys, take a look at any experienced trader, all of these experienced traders are opening 3 positions a week, not more, not less, 3 or 5 positions in a single week, not in a day. And that's why I'm every single time talking about this, that you have to understand success in the market isn't determined by how many trades are you willing to open. It's determined by how many trades are you willing to miss. Are you willing to miss out? Because that's literally the key element of trading. You have to learn how to miss out from the trades. You have to learn how to take the best probability setups. And yeah, that's why all of the good and best and master of the Forex traders are only opening 3 to 5 positions a week. And that's what you have to understand. And as I said, after last week's webinar, I saw that you understand this. I saw that you actually understood this, that you have to open less positions. And if you're opening less positions, you'll be more successful in the market. Because if you're opening a position on every single change of character, etc., then you'll blow your account. You'll blow the whole account of yours. Because you are taking losses. You'll feel more stressed out. You'll feel more, I don't know, less disciplined. You will feel like shit. Literally, you will feel like shit, because if you're making losses after losses and you're in a, for example, 10 losing streak, you are losing 10 in a row, you'll feel like shit. But if you're only focusing the high probability setups and you are opening 3 to 5 high probability setups a week, from those 3 to 5 high probability setups, for example, 2 or 3 will be a winning one. And from that 5 setups, from those 5 trades, if you're winning 2 or 3, you'll be happy. You'll boost your ego, you'll boost your confidence, you'll be more disciplined, because you see that I'm actually winning in this game. I'm actually having good experiences. I'm actually having wins, not just losses. But if you keep executing shit setups, if you keep executing really low probability setups, you'll just stack losses on losses, and you'll actually destroy your confidence. You'll destroy your motivation. And yeah, sorry for talking about this thing once again, because I talk about this thing in every single session, but it's so important for you to understand. And actually, last week, I saw that you understood it. So let me just continue with the overall 4-hour markups and the 50-minute markups and the overall forecast breakdown, etc. And let me just read the comments. It was really helpful with the hyperpolarized setup class. I like the concept of missing out on trades. Talk on change of character, please. What is the average? Actually, Lucas, a strategy, for example, this strategy can be determined. I mean, the success of a strategy can be determined by win rate, because I have explained this in the last webinar also. For example, on some weeks, I'm having maybe 30% win rate. On some weeks, I'm having 30% win rate. So from 5 trades, I'm just winning 1 or 2. On some weeks, I'm having, for example, like 70 or 80 or even 100% win rate, or in some months. But there's still a chance that from this 30% win rate, I'm going to achieve more risk reward ratio than the 70%. Because if I'm having a 30% win rate, let's just, for example, focus on 10 trades. Okay, I will just draw this for you, then I will break down the charts. So let's just focus on 10 trades. Here are 10 trades. Let me just change the color of this sheet too, because it doesn't match with the red color. So 10 trades. First scenario, I'm having a 30% win rate. Second scenario, I'm having a 70% win rate. 30% win rate, meaning I'm winning 3 trades out of the 10, right? But there's still a chance that these three trades, for example, each of these 3 trades will hit 15 risk reward ratio. If I'm hitting 15 risk reward ratio on all of the 3 trades, then that will be, just counting up, 45 risk reward ratio profit minus the 7 risk reward ratio. Let me just delete this. I'm drawing a bit too big. So it will be 45 risk reward ratio in win, and minus 7 risk reward ratio, it will be 37 risk reward ratio in profit. For example, on the second week, I'm having a good week because I'm having 70% win rate. So I'm winning 7 trades out of the 10 trades, meaning, yeah, it's a good win ratio. But for example, I'm having like 5 risk reward ratio profits. So if you're counting it up, 5 risk-reward ratio times 7, that will be 35, right? It will be 35. So I'm having 35 risk-reward ratio profit from those 7 5 risk-reward ratio profit trades. If I actually lose the losses, which is 3, and just count it up, it will be 32 risk-reward ratio. So with 30% win rate, I can have bigger risk-reward ratio than with 70% win rate. So actually, we don't have to care about the win rate. All we have to care about is actually the risk-reward ratios. We don't give a shit about win rates. We don't give a shit about strike rates, anything like this. We care about risk-reward ratio, and we only care about risk-reward ratio. So yeah, just focus on what you're doing, guys. Focus on executing your edge, because even with 10% win rate, you can be successful, you can be profitable, because our minimum our minimum risk-reward ratio is 5. So with 5 risk-reward ratio, you can be profitable with even 20% win rate. And that's all you need, one good trade on a week. If you're having one good trade in a week, you'll be profitable. Just literally, if you're taking 5 trades a week and you're having only one good trade, only one single good trade on a week from those 5 trades, you'll be profitable. That's why you have to stop forcing your trades and only take the high probability setups. And yeah, I'm just finishing this talk, and let me just move on. And yeah, I will just have to blow my nose out. Sorry, just a minute. Okay, I'm back. We love it, flipping. I talk about it. I understand that. I'm just curious about your. Yeah, I just explained that on some weeks I'm having like 100% win ratio. On some weeks I'm having 10% win ratio. So yeah, it depends on the week. Yeah, and I just turned the AC on because it's not the best idea to actually have the AC on when I'm just cold as fuck. So let's just break down the 4-hour chart. Actually, guys, I'm really loving this chart. Just look how clean it is. It's so clean. It's so flipping. It's a flipping chart. Do you need the colors? Do you want to see the colors on your chart? If you want, I will just give it to you. Okay, so let me just start with the 4-hour breakdown. Can you hear me?
Yes.
Okay, so 4-hour chart breakdown. What can we see right here? We've already talked about this supply zone tap right here several times. Okay, I will just adjust this to 60%, maybe. Yeah, 60%. Okay, so we already talked about the 4-hour, not 4-hour. This was a daily supply tap up here. So we talked about this several times, right? This was a daily supply zone. The price has just mitigated, and after the mitigation of the supply zone, which was almost a 50% mitigation, after the mitigation of the supply zone, price has changed character here to the downside, right? So there was a perfect change of character movement, strong change of character to the downside, which has been caused by this extreme supply zone up here, right? Change of character has been caused by this supply zone up here. What else can we see? The price has built up liquidity for this supply zone. There's still liquidity. This is liquidity, or we can consider this as liquidity, as a liquidity trend line, which is prices on the way up to actually sweep. Yeah, this was the extreme of the movement, and there was a decisional movement. As you can see, this decisional of the movement was this supply zone here, which price was reacting on. So technically, there was liquidity. This supply zone, this decisional supply zone, was part of the liquidity, and price has just swept this liquidity with this movement to the upside, right? So this liquidity has been swept. This isn't liquidity anymore. The new liquidity is right here, which is just below the extreme one, right? So what else can we see? As we talked about this yesterday in the markup updates and recap video, price has just reacted on this demand zone down here. This 4-hour demand zone was the extreme of the liquidity sweeping movement to the upside. So from this demand zone, from this 4-hour demand zone, prices created a huge inefficient movement to the upside, swept the liquidity, and created a reversal and created a liquidity. So what does it mean to us? We actually can expect, because price has reversed on this demand zone, prices reversed on this demand zone, so we can actually expect the continuation up to this extreme zone. And when the tap of this extreme zone happens, when this extreme zone will be tapped, then we'll be able to wait for a 15-minute confirmation on this zone, and we'll be able to continue the overall movement to the downside. Because Why? Why are we expecting bearish movements? Because the daily chart is extremely bearish still. Let me just switch to the daily chart and you'll see that the daily chart is extremely bearish still. As you can see, huge inefficient movements to the downside over and over again. Inefficient movement, pullback, inefficient movement, pullback, inefficient movement. And this is the pullback of the less recent lower low, right? So this is how structure works. Creating a high point, low point, lower high, lower low, lower high, lower low. And this pullback, this movement right here is just the pullback of the overall bearish structure, creating a new lower high. If we react on this supply zone, it has already reacted on this supply zone, on this daily supply zone. And after this, it can create a new lower low. This is how a structure looks like, right? This is how a bearish structure looks like. And price has just reacted on this daily supply zone on the 4-hour chart. And on the 4-hour chart, it has changed character. As we talked about this several times, here was a change of character. So price is on the way up to mitigate the extreme of the character changing movement. So this was the extreme of the character changing movement, and price is on the way up to mitigate this supply zone. There's actually liquidity below this supply zone also. And yeah, what could be the next possible target point? What could be our next possible target point? It's this one right here. Why is it the less recent? Why is it the possible target point? Because this is the less recent variable demand zone on the 4-hour chart. So this is our swing target point. Because, for example, if you open a 2-pip stop loss position right here, then targeting this demand zone will give you over 100 risk-reward ratio. And we are not aiming for 100 risk-reward ratios, as you may know. We are perfectly fine with 5-10 risk-reward ratios. We are booking your profits. But this is our overall target point. So if price, for example, creates a good entry opportunity right here on the 15-minute chart, change of character, 1-minute change of character, you enter here, you'll be able to target some random 15-minute demand zone right here. If that demand zone breaks, you'll be able to enter in another position, and you'll be able to enter another demand zone somewhere around here. If that demand zone breaks, you'll be able to enter in another position, and you'll be able to target our final target point, which is our supply. Sorry, I can't speak, which is our demand zone down here. That's how you can use the swing target point. You're not targeting with full TP. You're not targeting these swing points with full TP. This is our overall last target point. And if this target point is being hit, it will be hit. And if it's being hit, then we can expect new scenarios. There will be a change of character, we'll target the upside. There will be the break of this zone, we'll target the downside. This is how the structure works, right? So, okay, let's just scratch up the scenarios that could happen today or on this week. So the first possible scenario that could happen on this week or even today, I believe it won't happen today, just on this week, that price will create an upside movement, for example, react on this less recent supply zone, because as you can see, we have a supply zone here that has caused this inefficient movement to the downside, but this supply zone will be weak. Why will it be weak? Why am I saying that this supply zone right here is weak? If you raise your hand, you can answer this question. Hussein?
It didn't break any structure, the downside.
Exactly. This is a weak supply zone. Because
yes, sorry, just one more thing. It has liquidity above.
Exactly. Thank you. And Future Millionaire has just typed down the third thing. I was looking for this answer, especially that this is substructure. That's what we was talking about. This substructure thing goes on for every single time frame because time frames are fractal. This is the substructure, right? Low point, high point. This is substructure, nothing else but substructure. And this substructure couldn't break below the last low point. So meaning this will be a sub supply zone also, which means this will be weak. We can expect the break of this supply zone. So yeah, this is the first scenario that could happen, that price will react on this supply zone, come down to this demand zone that has caused the less recent inefficient movement here, come down to this demand zone, change of character right here on this demand zone, and we are targeting this supply zone. Because if price action reacts on this supply zone, this sub supply zone, that will mean that there will be more liquidity. This is more liquidity, as you can see. And if price reacts on this demand zone, if it reverses on this demand zone, then we can target this higher supply zone with longs. This will be a clear long opportunity. So let's see the second opportunity that could happen, or second scenario, second forecast, that price actually breaks above this supply zone without any rejection. There will be a break of this supply zone. For example, on the 15-minute chart, there will be a 15-minute demand zone. It creates more liquidity with this stop. We'll be able to enter in a long position after a break of this supply zone with a confirmation right here, targeting this supply zone. Two scenarios between the zones. So these are the two scenarios between this zone tap and this zone tap. These are the two possible high probability scenarios. What happens if this zone is being tapped without any long confirmation right here? So price just blows to the upside and taps this supply zone. We can just simply wait for a 15-minute change of character right here. After a 15-minute change of character, we can wait for a 1-minute change of character, but we already know this. What can we do after a 4-hour zone tap? After these confirmations, fractal confirmations happen, we can target this demand zone down here. What happens if this demand zone is being tapped first? Then we can simply aim for this supply zone, and if this demand zone will be tapped first, and if this demand zone can actually create a change of character, then that might mean that this high point will be weak. Because if this supply zone, this daily supply zone, can take the less recent valuable demand zone out, then this will be weak. This high point will be weak. So we could expect the break of this high point. We can expect the break of structure right here. What happens if this demand zone is being tapped first and this demand zone breaks? Then after this demand break, we'll be able to actually execute position on this 15-minute zone that has caused the break of this zone. Confirmation right here, 1-minute confirmation, bam, execute shorts following the main trend, because as I showed you on the daily chart, the main trend is bearish, right? Upside movements, downside movements, upside, downside, upside, downside, upside. This is the structure. So these are the possible scenarios on the 4-hour chart. Actually, we don't have to predict which scenario will happen. All we have to do is follow this structure. It's this easy. We are just simply following the structure that's happening on the 15-minute chart. So 15-minute chart, what can we see on the 15-minute chart? I will just move it like this. Yeah, Mark?
Please go back to the 4-hour. Do you consider this as a change of character? Please let me throw it. This.
Yeah, that's a change of character.
Okay, thank you.
This is a strong change of character. This is a weak change of character. Okay, so 15-minute chart. What can happen on the 15-minute chart? So there was the 4-hour zone tap that has happened yesterday, right? This zone tap, this 4-hour zone tap has happened yesterday. What else has happened yesterday? The break of this high point has also happened yesterday. So this huge inversion movement has happened yesterday. This was the session that we just missed. We couldn't find a good entry opportunity inside of this movement. So yeah, it has been missed. I entered in a position somewhere around here. I targeted the last recent supply zone up here, this one. Actually, my break-even point did hit right here, but I explained this in the recap video. So what can we expect on the 15-minute chart? We can find a good demand zone down here, as you can see, that has caused the last recent break of structure, or even the flip zone, right? Because price was coming up here on the 15-minute chart, as you can see, 15-minute coming up, reacting on the extreme supply zone here, reaction, reversal, flip with body closure, right? This was the body closure of the 15-minute chart, and the flip has happened from this demand zone down here. Actually, as you can see, prices tagged this demand zone. There was a clean tap of this demand zone, but after the clean tap of this demand zone, price couldn't change character here to the upside. It has just reacted on this supply zone. Sorry, the reaction has happened on this supply zone. As you can see, price was just struggling to break above this supply zone. And after a struggle to break above this supply zone, price has swept liquidity to downside. There was a clear liquidity line here, as you can see, really clear liquidity line, or even this is a liquidity line, even this is a liquidity line. This liquidity line has been swept. After sweeping the liquidity, all of the liquidity, price just immediately blew to the upside, and this movement to the downside, this wick right here was just a liquidity sweeping movement, right? Not a break, because we already learned that this is a liquidity sweeping movement when price just wicks below a zone, for example. Perfect liquidity sweeping movement, perfect reversal to the upside after collecting enough liquidity from below this demand zone. Perfect textbook scenario, perfect textbook example. Flip scenario has happened right here. Downside movement, upside movement, return to the origin of the flip scenario, tapping this zone, creating liquidity for this zone, sweeping the liquidity, liquidity to take, liquidity to target, right? Here's liquidity to take. After liquidity has been taken, you can enter in a trade and you can target the liquidity. This is liquidity, this is liquidity, liquidity to take, liquidity to target. All easy liquidity based concept. So after this, price has just created this huge inversion movement to the upside. And as we talked about, it's currently inside of the 4-hour zone here. So this is the 4-hour zone that price is currently inside of, but this is a weak zone, right? This is a weak 4-hour zone because we already talked about why it is a weak zone. Will that weak tap offer will that weak tap or stop loss, or will it be overall? We would have entered after this tap has happened. I mean, after the sweep has happened, because we are entering after the liquidity is being swept. We don't want to become part of the liquidity. So what else can happen right here? I just want you to mark the, sorry, let me just switch back to the 4-hour chart and mark the supply zone real quick out. This is the supply zone, which I will refine on the 15-minute chart. Yeah, price is inside of the extreme of the supply zone. From the supply zone, the change of character has happened here to the downside, as you can see. There was the body closure, change of character to the downside. The price is currently reacting on this supply zone, as you can see. So whoever raises their hand first can answer this question. I want you to mark the demand zones, valuable demand zones out on this chart. Whoever raises their hand first, mark, please. Just mark the valuable demand zones on this movement. Yeah, this isn't a good demand zone because there's no inefficiency field. So more likely this demand zone will be broken. If this supply zone can give a reaction, then more likely this demand zone will be broken because this is simply part of the liquidity built up for the extreme zone. And there's literally no inefficiency between this high of the candle and this low of the candle. No inefficiency. If this supply can give a reaction, then this zone will be broken. But yeah, this is a demand zone, but not a valuable demand zone. The extreme zone is down here. This is the extreme demand zone that has caused the new breakout structure to the upside. There was a new breakout structure to the upside. Breakout structure has happened here, as you can see. And this is the origin of the breakout structure. This is the origin of the change of character right here. This is the origin of the flip. Basically, this is a flip zone because this zone has flipped this supply zone here, as you can see. The flip has happened from this zone. So what can we expect on the 15-minute chart? We can expect few scenarios. I will just mark this demand zone also out because this is still a demand zone, but not a valuable demand zone. What can we expect on the 15-minute chart today? There are 3 scenarios. First scenario, price reacts on this supply zone. This is a 4-hour supply zone, right? So we really need a 15-minute change of character, but we can consider this as a 15-minute zone too, because this is a weak zone. But okay, look at the scenarios on the 15-minute scenarios. First scenario, price will reverse on this supply zone, tap of this demand zone, and after the tap of this demand zone reaction, break of this zone, continuation to the downside from this supply zone that has caused the break of the demand zone. This is the first scenario that we can expect on. If this happens, I will be entering a trade for sure on the supply zone. I'll be looking for a really good scaling opportunity. I will enter in the extreme position. I will scale in on several positions on the way down to this demand zone. This is my main plan right here in this session. Second plan, if price can tap this zone, reverse on this zone, create a change of character on this zone. Then after it happens, I will enter in a position based on that 1-minute change of character. Based on that 1-minute zone that has changed the character. Okay, I will just remove it here. And I will be targeting longs, because if this happens, if even this demand zone can change character right here, then it will be a sign for the pressure of the bullish trend. And if this 1-minute change of character happens here, or even the 15-minute after 1 minute happens here, then I'll be targeting this supply zone up here, which is the extreme above the liquidity, right? Second scenario, but I believe this scenario has least probability, so I'm not really expecting that this scenario will happen, but I just keep it in mind. Third scenario, if price doesn't even tap into this zone, but just breaks above this supply zone, then after the break of this supply zone, there will be a new demand zone that has caused the break of this supply zone. And after this break happens, I'll be entering in a trade based on this zone with a confirmation, and I'll be targeting this supply zone up here. These are the lining up scenarios on the 15-minute chart. Basically, it's really clear and simple. Literally, there's nothing else on the chart right now that we can care about. All of these scenarios are lined up. All of these scenarios can happen today, and one of them will happen today. I'm 100% sure that one of these scenarios will happen today. All we have to do is follow these scenarios. Quick switch to the 5-minute chart. Or sorry, switch back to the 15-minute chart. Let me just take a look at the overall structure. Okay. Switch to the 5-minute chart. So what can we see on the 5-minute chart? basically the same as on the 15-minute chart, right? Nothing else. But only difference that this demand zone down here, and I mean up here, because it's up, this is the down demand zone, this is the up demand zone, extreme decisional. We can see that this demand zone right here is inefficient. So on the 5-minute chart, according to the 5-minute chart, this is a good demand zone. So yeah, once again, this could be a good demand zone. If price can react on this demand zone and create a change of character inside of this demand zone, we have a chance to see some really, really good long opportunities. But if this demand zone breaks, we'll be able to target the next recent demand zone down here, or even this demand zone right here. If it breaks, I mean, if this demand zone breaks, then I believe this demand zone won't be able to hold price. If this demand zone breaks, then we'll see the tap mitigation of this demand zone down here. If this demand zone holds, there's a chance that price will create liquidity inside of this zone. There's a chance that price will sweep the liquidity and reverse on this downside area. It's all about liquidity. If this zone will be liquidity, then the next recent zone will be able to hold price. If this zone won't be liquidity, so there's no liquidity, but it simply breaks, then this zone won't be able to reverse price. So it's all around liquidity. If there's liquidity, then pay attention to the next recent zone. If there's no liquidity, then just simply count it as a break of the zone. It's this easy. And if the break of this zone happens, then you'll be able to enter in a position and you will be able to target this demand zone down here. And yeah, I already lined up the scenarios that are waiting for us in this session. And someone has raised their hand. Who raised their hand? Okay, never mind. Actually, let me just switch back to the 15-minute chart. Because let me just check if this supply zone, I mean demand zone, was a reaction on something, but basically it was just a reaction on liquidity. So yeah, these are the real. Okay, I just answered it, perfect. So yeah, basically these are the valuable zones for us in this session. We can count the reaction on these zones. We can expect a reaction. If one of the zone that happens, if one of the reaction happens, we'll be entering your position. If none of the scenarios happen, and something different happens, I will send you the market updates. If none of the scenarios happen, but nothing different happens than I was just explaining, we are skipping out of this session and we are not trading. I'm waiting for the best possible scenarios. And yeah, I just lined up what can happen in this session, what can happen in the upcoming days. All we have to do is follow these scenarios. All we have to do is follow our own plan, follow our own lined up scenarios. And yeah, switching to the 1-minute chart is basically pointless right now because price is coming from a 4-hour zone. As you may know, this is a 4-hour zone and price has just mitigated this 4-hour zone. So yeah, it might be pointless to actually switch to the 1-minute chart. But if you are really greedy, if you really want to take any opportunity, which I don't recommend to, you can actually take a position based on the 1-minute change of character, strong change of character, of course. If price can change character on the 1-minute chart on a strong structural point, then you'll be able to enter in a short trade. But I don't really recommend this option because it's riskier than the zone tap. It's riskier than waiting for the POIs to be tapped. It's riskier than waiting for this zone to be tapped, this zone to be tapped, this zone to be broken. Basically, this is substructure again. If you're trading between this high point and this low point, that will be a substructure trade. That's why it's really recommended to wait for the tap of this zone. That's why it's recommended to wait for the mitigation, break of this zone, etc., etc., etc. But if you are really greedy, if you really want to trade, which once again, I do not recommend, then after the 4-hour 50% mitigation, there will be the 50% mitigation of the 4-hour zone. There's liquidity right here. So this liquidity will be swept. This 50% will be tapped, I believe, after liquidity sweeping movement. And after liquidity sweeping movement, price will just reverse to the downside. And if there will be a strong change of character, you'll be able to enter in a trade, in a short trade, and you'll be able to target this demand zone. But this scenario isn't recommended. I don't even know why am I showing you this, guys. I don't recommend you to do this. I'm just simply recommending you to wait for a clear tap of the zone, clear break of the zone, clear anything after a POI tap. So yeah, these are my thoughts around this session. These are the expectations around this session, and these are the markups. These were the markups. Feedback will be really, really appreciated in the feedback channel on Discord about this session, about the educational topic, about how you enjoy this session, how you like this session. And yeah, I will send the markup updates, guys. I will be sending the 50-minute and 5-minute markup updates. And thank you for being here in this session. Wish you guys a beautiful trading day, a beautiful rest of your day, and be profitful. Wait for the best opportunities only. Wait for the high probability scenarios, and take care, guys. And once again, the feedback will be really, really appreciated if you could write So yeah, thank you for being here. I hope you like this session. Take care, guys. See you.
Take care, guys.
Take it, guys.